This time, we are now going to discuss the rules on how to prepare your statement of changes in owner's equity. Okay, so once we are done preparing the income statement, we could immediately proceed in preparing the statement of changes in owner's equity, because we were also able to determine already some of the pertinent information that must be transferred from your income statement to your statement of changes in owner's equity. So just the same, the first thing that we have to do is to determine what is the purpose, why do we have to prepare this type of financial report or financial statement, and then we have to identify the elements that must be reflected or presented under your statement of changes in owner's equity. Okay, so the purpose of preparing now your statement of changes in owner's equity is to basically summarize, okay, the changes that have occurred in the owner's equity account. So there are only two types of changes which will now affect the balance of our owner's equity account. So it's either the change may refer to an increase in the owner's equity account or a decrease to the owner's equity account. So the increase or decrease would of course be brought about by the elements that must be reflected in your statement of changes in owner's equity. So the following, all right, the following elements are the very same elements or accounts which would now decrease or increase the balance of our owner's equity account. So there might be a net income or a net loss, okay, in the operations now of the business, or as a result of the operations of the business. Now, when the business was able to earn a net income, then necessarily a net income will affect to an increase in the balance of our owner's equity account. So conversely, if the results of the operations now of the business resulted to a net loss, the effect of which to our owner's equity account is a decrease to its value. Take note that your net income and net loss, the increase or decrease brought about by your net income or net loss respectively, are results, okay, or the necessary consequences of the operations now of the business. So results of the operations of the business, okay. So your net income and your net loss, all right, these are the necessary consequence now of the operations of the business. It would be different if we talk about this time your investments and your withdrawals, because when we say investment and withdrawals, these two are contingent, okay, to the acts that were made by the owner or the owners now of the business, so that when the owner will be injecting his personal assets, okay, or his personal capital to the capital of the business, then it would be called an investment. All right, and an investment would have the effect of increasing our owner's equity, okay, account, or the balance of our owner's equity account. So on the other hand, if the owner or the owners now of the business would be getting some, or would be getting a portion of the asset or the capital now of the business, then that would be properly referred to as a withdrawal. Okay, so for example, the owner or the owners of the business now would withdraw cash from the assets of the business, all right, for whatever purpose he may want to use that particular cash. That would be resulting now to a withdrawal. Okay, so an investment is an inflow of an asset or capital, all right, and such an inflow is or would come from the personal asset now of the owner or the owners of the business. Conversely, when we say withdrawals, or we also call this one drawings, okay, withdrawals from the business would be an outflow of an asset or capital in or of the business, and such outflow is going to be or is an effect, okay, of an action by the owner or the owners of the business. We don't have any concern okay, as to the purpose of the withdrawal, the what is important or what is binding or controlling in recognizing now a withdrawal is that when the outflow of an asset is caused, okay, by the owner or the owners of the business, then immediately we are going to recognize now your withdrawal or your drawings account. Okay, so your drawings will affect now the would have the effect of decreasing the balance of our owner's equity account. Okay, so these two are contingent to the acts of the owners, okay, or the owner of the business. All right, so I hope we are clear with this one. Okay, so let us move on. All right, you have here a summary of the possible changes which would be brought by the various elements in our statement of changes in owner's equity. So again, let's just repeat so that everything would be clear. If there are, okay, any investments, okay, by the owner or the owners of the business, or the results of the operations now of the business is a net income, then the effect of these, all right, elements would be an increase to the owner's equity account. On the other hand, if what transpired is a withdrawal, okay, or drawings by the owner or the owners of the business, or the results of the operations now of the business is net loss, then the effect of these elements would be a decrease in the balance of our owner's equity account. All right. Here is the pro forma report for the statement of changes in owner's equity. There would be two additional elements that we have, or components that we have to reflect in our statement of changes in owner's equity account. So aside from the four that we have mentioned a while back, okay, those are your net income, investments, withdrawals, and net loss. Okay, two more important components shall be reflected here. You have your capital beginning and your capital end. So the question now here is, where will we get the amount for your capital beginning? The capital beginning, the amount of which shall be lifted from your trial balance, okay, from your unadjusted trial balance. So whatever amount is reflected in the unadjusted trial balance, insofar as the owner's capital account is concerned, would be the same amount that we are going to use for your capital beginning. Okay, so that when we are now going to incorporate the effects brought about by the four elements that we discussed a while back, okay, we incorporate those four, we can now we can already solve for the capital end. Okay, the capital end is the amount of the capital that must be reflected later on in our statement of financial position or your balance sheet. Okay, so meaning if you are going to use the unadjusted amount of your capital in your statement of financial position, then that would be the time that you will cry, because you won't be able to balance your statement of financial position, not unless you are already done computing for the capital end. So take note of that. A very important part of the process, okay, in preparing your financial report is the order of priority in the preparation now of your financial reports or your financial statement. So that everything would become orderly, all right? You start first in preparing your income statement so that you would be able to determine whether there is a net income or a net loss. After which, you can already proceed in preparing your statement of changes in owner's equity so that you would be able to compute for the capital end, because this is the amount that is going to be transferred in our statement of financial position later on. So you see there the process, okay? If from the very beginning you already committed a mistake, then you won't be able to move on to the next processes correctly, because you won't be able to use now the correct amounts. You won't be able to balance your financial position or your statement of financial position later on if, from the very beginning, you already committed a mistake. So you have to be very careful in carrying out the process. You have to follow the steps on how to prepare these financial reports. Otherwise, you would just be wasting time, okay, looking for the balancing or the missing amounts. Why is it that you cannot balance, okay, your statement of financial position later on? So that's what I'm trying to emphasize here. All right. Okay, you have here a note. Okay, I already told you about this one, that the amount of the net income or the net loss is lifted from the income statement or your statement of comprehensive income. All right. So that we would be able to understand this better, let us answer a particular problem. So we were given a problem. Anti-Merchandising prepared its unadjusted trial balance for the year 2019. Okay, you have here all the pertinent information necessary for adjusting the balances in our unadjusted trial balance. Okay, so before preparing, before preparing your financial reports, you have to first determine or prepare your adjusted trial balance. You cannot proceed yet, not unless the amounts in your trial balance are already adjusted. So we have to adjust them first. Therefore, we have to consider the following information in adjusting now the accounts or the amounts in our unadjusted trial balance. Okay, so let us adjust them one by one. First, the supplies at the year end amounted to 1,000 pesos. Therefore, we just have to recognize additional expenses at the end of the accounting year here. And how do we recognize additional expenses? We did that also in our previous discussions. Okay, so in recognizing expenses, we just have to debit the expense account. What expense account is involved here? We have supplies expense. Okay, so your supplies expense shall be debited for the amount of how much? So in our given here, only 1,000 is left. If originally we have a total of 12,000 pesos as the unadjusted balance of our supplies, to make it 1,000, we have to recognize an additional expense of 11,000 pesos. Okay, so to complete the adjustment, we have to credit your supplies, of course, so that the amount of 12,000 would be reduced by same amount of 11,000 pesos. Okay. All right. So that's for the first adjustment. How about for the second adjustment here? Okay. So there is a depreciation on the vehicle amounting to 187,500. All right. I told you about this one before, that if you recognize a depreciation expense, there is only one pro forma entry for this one. So you just have to memorize the pro forma entry for depreciation expense. And what is that? We just debit your depreciation expense. Okay, and we credit your accumulated depreciation. So later on, we are going to talk more about your accumulated depreciation, because this is an account that must be reflected in our statement of financial position later on. But let's just talk about that one later, okay? For the meantime, we record depreciation for the amount of 187,500. So credit the same amount of 187,500. All right, so we are done. Okay, adjusting now your supplies and your depreciation expense. Next, okay, we were given now the actual value of the merchandise inventory at the end of the accounting period. Therefore, what method of inventory is applied in the problem? The method of inventory applied in the problem is your periodic inventory method. Okay, because under your periodic inventory method, the amount of the merchandise inventory end is contingent on the physical counting of inventories left made by the business at the end of a particular accounting period. Okay, so in this case, at the end of 2019, the business was able to determine that the merchandise inventory amounted to 46,000 pesos. So how do we adjust the amount of our merchandise inventory? we have to first compute for our cost of goods sold. Okay, I hope you could still remember the formula on how to compute for our cost of goods sold. All right, what is the formula in computing for the cost of goods sold? We have to determine the amount of our merchandise beginning first, right? And then add all your purchase accounts. So you have your purchases. What else increases your purchase account? You have your freight in. Okay? So after adding all the purchases and the freight in attributed to our merchandise inventory, we have to reduce it by the amount now of our contra purchase accounts. And what are these? We have your purchase returns and allowances and your purchase discounts. Okay? So that once incorporated, or once all of these four are determined already, we can now compute for our total goods available for sale. Alright, after computing for the total goods available for sale, we are now going to deduct the merchandise inventory end determined through physical counting at the end of the accounting period. Alright, and there you have it. You can now recognize your cost of goods sold. Okay, so let's apply this particular formula in computing for our cost of goods sold now. Your merchandise inventory beginning, where do we get the amount of this one again? I told you before that the merchandise inventory beginning is the amount of our merchandise inventory reflected in the unadjusted trial balance. And in our unadjusted trial balance, we have here 64,000 pesos. Okay, so that's 64,000. Alright, and then we have here your purchases. How much is our total purchases for the year? We have a total of 480,000. How about freight in? We have a freight in amounting to 20,000 pesos. Okay, do we have purchase returns? Yes, for the amount of 10,000 pesos. We also have here the amount of 8,000 as our purchase discounts. Okay, so we can now compute for our total goods available for sale. How much is our total goods available for sale? That would be 64,000 plus 480,000 plus 20,000 minus 10,000 minus 8,000. So we should be able to compute a total goods available for sale for the amount of 546,000 pesos. Okay, so that would be our total goods available for sale. Now, to compute for the cost of goods sold, we just have to deduct the amount of merchandise inventory end, which is 46,000 pesos. So minus 46,000 pesos. Okay, so the amount therefore of our COGS is, that would be 546,000 minus 46,000. Therefore, we have, or the business was able to sell a total of 500,000. Okay, 500,000 pesos. Alright, so once we are done computing for the cost of goods sold, we may now close it, okay, against our merchandise inventory end. And how do we do that again? For our third adjustment or adjusting entry, what do we do? First, we have to establish our merchandise inventory end. Okay, so we have to establish first our merchandise inventory end for the amount of 46,000. Okay, where are we going to close our inventory end? We use, for the meantime, a temporary account. We call that your income summary. So we credit, for the meantime, your income summary for the same amount of 46,000 pesos. Okay, we are not yet done because your COGS is not yet recognized. So to recognize our cost of goods sold, what do? We just have to close first your purchases accounts. Okay, so in closing, all you have to do is to reverse the original entry that you made, okay, when you recognize this purchases account. So what do? Your purchases accounts are your purchases and your freight in. What did we do originally for in your purchases and your freight in? We debited them originally, so to close them, we just have to reverse the entry. We need to credit them this time. Okay, so we credit your total purchases amounting to how much? Purchases shall be credited for 480,000. Okay, what else? You have your freight in there. We have to credit your freight in for the amount of 20,000. All right, what's next? After closing your purchase accounts, we have to close also your contra purchase accounts. We just have here the two, purchase returns and allowances. So if they were originally credited, to close their amount, we have to debit them this time. So we debit your purchase returns and allowances and debit your purchase discounts. For how much? We have 10,000 here and we have 8,000 pesos here. All right, so we are not yet done. After doing that, what's the next account that we have to close? We also have to close your merchandise inventory beginning. Okay, so if your merchandise inventory beginning here is originally debited, what do we do to close its amount? We just have to reverse the entry. So we have to credit your merchandise inventory and in merchandise inventory beginning for the amount of 64,000. Okay, so are we done already? Not yet. After closing your merchandise inventory beginning, we also have to close your income summary account. So this is the income summary account that we have to close. The income summary for 46,000 pesos. Okay, are we done already? Not yet, because the difference between the total credit and the total debit must be the same amount of cost of goods sold that we have computed here. Okay, so if you try to total your credit and your debit and your credit here, how much is that? For the total debit side, we have 10,000 plus 8,000 plus 46,000. The total is 64,000. Okay, on the other hand, your credit is 480,000 plus 20,000 plus 64,000. So how much is your total credit side here? We have a total of 564,000. Okay, so whatever is the difference between your total credit and your debit here would be the amount of our cost of goods sold. So how much is the difference? That's 564,000 minus 64,000. That would be for the same amount of 500,000 for your cost of goods sold, which is the same, okay, here, the one that we have computed in the formula for your cost of goods sold. All right, you just have to repeat that every now and then so that you would be able to master the process on how to adjust your merchandise inventory beginning to its ending balance. Now that we are done preparing your adjusted trial balance, we may now proceed in preparing the income statement first before we would be able to prepare now your statement of changes in owner's equity. So we have here a better presentation of our adjusted trial balance. You change this one. This should already be adjusted because the amounts are already adjusted. All right, so just the same, we have to start first by writing the heading of the report that we are preparing. Since we are preparing your income statement, then we just follow the format on how to prepare your income statement. Remember that there are two ways or two forms on how to prepare your income statement, either your nature of expense or your function of expense method. Now, for us to conveniently prepare your income statement, let us just resort in using now your nature of expense. All right, so let's start with the heading here. So we start in writing the name of the business. We have anti-merchandising. Okay, and what type of report are we preparing? We have here an income statement. we have your date. Okay, since we are using, or the accounts involved in this particular report are temporary or nominal accounts, then it would be proper to use the phrase for the year ended in this particular report. All right, so we have here for the year ended December 31, 2019. Okay, now since we are or the problem involved, the business rather involved in this particular problem is a merchandising business, the income account that is involved here is sales. Okay, and what did we discuss before? The sales that must be reflected in the income statement must already be the net sales. Okay, so here the sales that we see in your adjusted trial balance is not yet, all right, the net sales. It's still the gross sales, basically because your sales returns and allowances as well as the discounts are not yet deducted. All right, so to determine first your net sales, we have here your gross sales amounting to 851,000 pesos. Sorry, 851,500. Okay, and we have to deduct here your sales returns and allowances as well as your sales discounts. Okay, so your sales returns and allowances is 1,000 and a sales discount of 1,500. All right, so how much is our net sales here? The net sales computed must be 851,500 minus 1,000 minus 1,500. You should be able to compute for 849,000 pesos. All right, so the amount of sales that would be reflected in your income statement therefore should be 849,000 pesos. Okay, and we can proceed now in deducting the amount of our cost of goods sold. Okay, by the way, since this is a report, what's the rule? We have to write down the entire term. What's the importance of writing the entire term in the financial report? Because it is a document, it is a formal document, all right? Therefore, you have to present it in the most comprehensive way so that the reader would be able to immediately understand, all right, the report that you are showing them. Okay, if you shortcut it, then there might be a chance that they won't be able to determine immediately what account is that. So for to make it as comprehensive as possible, you just have to write down the entire word or the entire term here. Okay, so how much is the amount of the cost of goods sold that we were able to compute a while back? We have 500,000 pesos, correct? Okay, so to deduct your cost of goods sold from your net sales, we have your gross profit. The gross profit amounted therefore to, we have 349,000 pesos. Okay? So, we can now proceed in deducting the operating expenses incurred by the business here. Alright, so we have to be careful. Let us identify them one by one. We start with your salaries expense. Okay, do not forget to put here the indentation again, you might be asking, when is the time that you have to indent the accounts that you are presenting in your financial report here? Well, the rule is if you are going to make the computation in a separate column. So this one is one column if you are going to put your computation in a separate column, it must be to the left. Okay, so a new computation must be to the left, and if you use another column, it is necessary for you to indent the accounts that are used for that separate computation. So in our case, since I want to compute for the total amount of expenses in a separate column here, I have to indent all of the accounts involved in that particular computation. So that is how you are going to make your reports presentable. Okay, so in this case, let's indent all of the amount or of the expenses that we are going to total later on. Right, we start with the salaries expense. We have here your supplies expense. You have your utilities expense. Advertisement expense. Communication expense. Freight out. Okay, do not forget the difference between a freight out and a freight in. Your freight in, again, is the amount of the delivery cost. Okay, but that amount of delivery cost is added to the merchandise inventory. On the other hand, if the delivery cost is considered as a freight out, then it must be recorded as an expense. All right, so here we have a freight out. And lastly, you have your depreciation expense. Okay, so let's total the amounts. We have salaries expense for 98,000. We have supplies 34,000. We have utilities expense 4,000. Advertisement expense of 6,000 pesos. We have communication expense 2,000. Freight out of 3,000 pesos. And lastly, a depreciation expense of 187,500. Alright, so you get the total of the expenses. We have 98,000 plus 34,000 plus 4,000 plus 6,000 plus 2,000 plus 3,000 plus 187,500. Okay, so you should be able to compute for 334,500 here. Okay, let's just counter check if we got the correct amount. We have 98,000 plus 34,000 plus 4,000 plus 6,000 plus 2,000 plus 3,000 and 187,500. So that's 334,500. All right, so you get the difference between the gross profit and the total expenses. Then you will be able to determine whether the results of operation is net income or net loss. In this case, since we have a positive value, okay, do we have a positive value here? Yes, that would be 349,000 minus 334,500. A positive value of 14,500, okay, is generated as net income of the business. All right, so we save the amount of net income here, your 14,500 pesos. Why? Because this plays important role in the preparation later on of our statement of changes in owner's equity. Alright, so since we are done preparing your income statement already, we can move on now in preparing the statement of changes in owner's equity. Just the same, we always have to start in writing down the heading for this particular financial report. Okay, and in doing so, you have to first write down the name of the business involved and what type of report are we preparing. In this case, we are now preparing your statement of changes in owner's equity. Okay, so how about the date? How are we going to present the date this time? Take note that the elements involved here are also temporary accounts because they are ultimately closed against your owner's equity account. Meaning when we prepare your statement of financial position later on or the balance sheet, these elements, okay, found in your statement of changes in owner's equity, except for your owner's equity end or your capital end, will not anymore be reflected in the balance sheet. Therefore, the same with your income statement, we are also going to make use of the phrase for the year ended. For the year ended December 31, 2019, because these amounts are applicable only during the accounting year 2019. All right. So I hope you were still you could still remember, okay, the format on how to prepare your statement of changes in owner's equity. Okay, we have here to identify first the amount of your capital beginning. All right. So the question here again is, where do we get the amount or the value for our capital beginning? Now, if you try to observe, whether you get it from your unadjusted or your adjusted trial balance, your capital account is the same. Okay? So the capital beginning may be lifted either from your adjusted or your unadjusted trial balance. All right? Anyway, they are just the same in value. The difference later on would be observed when we prepare now your the last trial balance that is required of us to prepare is actually called your post-closing trial balance. So when we close the temporary accounts later on, all right, the temporary accounts are going to be ultimately closed against your capital account or your owner's equity account. Therefore, the owner's equity account that must be seen in your post-closing trial balance must be adjusted already. Okay? So that is the point in time where the amount of your owner's equity account is different. But for your unadjusted and your adjusted trial balance, since there are temporary accounts that are not yet closed against your owner's equity account, the balances of your capital account seen, all right, in your adjusted or unadjusted trial balance is the same. Okay, so in this case, we have an amount of capital, all right, of 1,580,000 pesos. Okay, so this is the amount of capital that would be changed by the elements that we were able to identify a while back. Okay, so what are the elements again that will affect now to an increase in the amount of our owner's equity? We have here either additional investments, right? Or we have your net income if the results of operations resulted to a net income. All right, so in the problem, okay, we were not able to determine, or we were not given any information regarding additional investments made by the owner of the business here. Therefore, we have nothing to put under your investments here. But a while back, when we are preparing your income statement, we were able to compute now for amount of net income, okay, of 14,500. Therefore, the only element that we have to incorporate or include now in the statement of changes in owner's equity is your net income. So we don't have anything to put under your additional investment. Okay, in this case, all we can add is the amount of your net income. So how much is our net income here? We have a net income of 14,500. Okay. So do we have more? No more. Okay, take note of that. It's very easy. There are only two elements that may increase your capital beginning account, and that would be net income or additional investments. Since in the problem we don't have any information on the investments made by the owner, we don't have anything to put as an investment in our financial report. Okay, so you get the total. How much is the total of your capital beginning and your net income? We have 1,580,000 594,500. Okay? So 1,594,500. Next, okay? So once we are done adding now your net income, we determine the elements which would decrease the capital beginning account. So we have here your withdrawals or your net loss. Now, look at the given in the problem. Do we have any amount for withdrawals here? In our case, we have withdrawals amounting to 15,000. Okay, so you deduct it from the total. We have 15,000 here. Okay, take note that net income and net loss cannot be presented or cannot exist simultaneously. The results of the operations of the business may just either result to a net income or a net loss. So, if in this problem, the results of operations resulted to a net income, then necessarily there is no net loss. Therefore, we have nothing to put in your statement of changes in owner's equity as a net loss. Alright, because you already have here your net income. So in that case, the only amount that must be deducted from the capital beginning is 15,000. Alright, with all those, we can now compute for your capital end. And in this case, how much is our capital end? That would be 1,594,500 minus 15,000 pesos. We have the running balance now of your capital or your owner's equity account is 1,579,500. Okay, double rule and circle. So that's it. This is now your statement of changes in owner's equity. So it's very, how do you call that? It's still very easy to prepare. Actually, if I try to identify which financial report is the easiest to prepare, I should say it's the statement of changes in owner's equity, considering the quantity, okay, of the elements that you have to consider. In here, we only have to consider 4 elements, okay, that changes now the balance of our owner's equity. Okay, so there you have it. I hope you were able to take note of the process on how to prepare your statement of changes in owner's equity. All right. So to wrap up our discussion, let us take note of the following. Of course, what is the purpose in preparing now your statement of changes in owner's equity? We said it is to summarize the changes that are going to affect now the balance of our owner's equity account. All right, and what are the elements that would bring about the change in our owner's equity account? Okay, so what are the effects? We said if the increase or if the effect is an increase to the owner's equity account, then there are only 2 elements that need to be considered. And what are those? We have your net income or your investments. On the other hand, if the effect that we are looking for is the decrease to our owner's equity account, then we just have to look for the values of our withdrawals or the net loss. Okay, again, let me repeat, your net income and your net loss cannot exist simultaneously. Okay, they are exactly the opposite of each other. So if there is a net income, cannot be that there is a net loss. All right, so take note of that. But can your investments and your withdrawals exist together? Yes, that could be possible. Okay, because it is possible that the owner during the accounting period invested an asset in the business, and at the same time, within the same accounting period, he withdrawn a particular asset from the business. So that's possible. Okay, so there you have it. Please repeat, all right, answering problems so that you would be able to master, okay, the preparation now of the first 2 financial reports that we just discussed. See you in the next discussion.